Welcome back to today's Daily Report Market videos with me, Richard Perrimark, analyst at Hantec on Thursday, 6th of June, looking at cable, which interestingly had this run of three positive candles, which broke the little downtrend throughout May, broke that downtrend. And yesterday's candle was a shooting star, and that comes at which the point underneath the resistance at 27.55. So you haven't actually seen any real decisive technical turnaround yet. You haven't seen it on a price basis. You haven't seen a breach of a lower reaction high yet. And finding resistance again underneath 27 figure on a closing basis. Now this is interesting because that sort of is a basis of resistance, isn't it? 27 figure, an old pivot. And the fact is that we've seen that market just rolling over a bit. Now, these momentum indicators are interesting because you've seen the MACD lines crossing higher, and stochastics also coming higher. RSI up around 40. If this is a point at which these momentum indicators just start to dissipate their little recoveries, given the fact that we've failed under 27.55, this could be once more a point at which the market just starts to stall. We've seen a basis of consolidation, I suppose, today, a little bit of a dip on an intraday basis that has then been slightly bought into, but nothing too decisive in terms of recovery. You can see here on the hourly chart where there's basically, it's turned into a bit of a ranging scenario rather than in any decisive recovery. You've seen the RSI on the hourly just sort of around 65 is the limit of the upside, 40 on the downside, so very slight positive bias, and that I suppose comes with the fact the market has been pulling higher. But is this a point at which that recovery just starts to dissipate? Well, we've had in the last couple of hours, as the Europeans have come in, a little bit of a reaction higher, which is positive. But is it a suggestion that the market is starting to find its footing again? Well, there's a bit of a basis of pivot at 26.65 area. You talk about yesterday's Tuesday's reaction though, 26.40. So there is this run of higher lows that is still in place, and that would suggest that the recovery play is still in force, but this negative candlestick that we had yesterday is a concern now. And given the fact that the resistance came in underneath 27.55, that is a level that we need to now look out for, 27.45 and 27.55. So again, we're looking for a close above 27 figure to really start to improve the outlook, but above 27.50 really does need to get the market going in terms of the recovery. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.